Hey everyone, welcome to the WIRA Daily Market Update. It is June 25th, Tuesday. We're just about halfway through a long week. What's been a long week already, right? Has it been a long week for everybody? It depends on who you are. So look, we had a little pullback in the market today. It looked like we were going to start to rally there right after the open, and then all of a sudden everything just kind of kicked in, right? The Nasdaq ended up down about 1.5%, the S&P about 1%, and the Dow Jones about a 0.5%. But technically, the market's not really flashing sells or anything. It almost reminded us in the trade room, in our trade room, of December 24th, didn't it? It kind of felt like capitulation. The bad news, really the news that pushed the market down was a little bit of Jerome Powell statements, but basically all he did was he stood up to Trump and he declared their independence. And also, too, he just talked about short-term political interests and things like that. He made a lot of sense, and what really hit the market was the speaker before him, who had mentioned a 50 basis rate cut. Now, nobody's been talking about a 50 basis rate cut. It's been 25 basis, and pretty much the market's got it priced in. It's expecting 100% for that 25 basis rate cut. Well, all of a sudden, this guy says 50 basis cuts, and now all of a sudden the market's salivating over a 50 basis rate cut. It reminds us a lot of December 24th. You know, the bad news was just recycled old news that investors kind of just knee-jerked on. Yeah, there's a lot going on the global stage, but there's potentially some good stuff going on the global stage. And, it looks like a market that pretty much already had this bad news priced in that for some reason just got kicked in the knees today. Probably your retail traders with their fear. You can see the VIX. We spiked up to 1628, nothing even close to that 20-point level. Little 6-7% run, not much when you all things considered, right? We're thinking that now that we've got these Fed speeches out of the way, that we start rolling into the enthusiasm of the G20. Now that could be good or bad, right? Depending on how the news cycle comes out of that. But we're thinking that it's going to be good. There's a lot of bad news over the last 6-7 weeks that got priced into that trade deal, right? Or the failure of it or the slowness of it. So let's see how that shakes out. In the meantime, let's go look at our charts, right? The chart never lies, and we're going to talk to it right now. You can see on that S&P, look at that move. That moved down right into the bottom of that support. It looks technically like it's okay. You probably don't want to sell down any more than that. And we'll see how tomorrow comes out. But you can see it stopped right at those tops. Probably a little bit more than it would have been on this top. But that's nice. Let's clean out that collusion. Let's clean out that supply from back there and move on to an all-time high. Now, when we stretch this chart out, we've got potentially 1, 2, 3 tops, or more pure 1 top, 2 top, 3 tops. Look, on this one, we talked about it yesterday. We're either going to get over this hump or we're probably going to roll into that dreaded bear market, or at least a sideways market for a while. And this is probably based on trade, right? And the global slowdown and stuff. So you want to be cautious right now. We opened up a QQQ trade today. We bought some Qs about a month out, and we bought them about $8-9 off the current price on the strike. I think we bought the 175s. Let's go take a look at the Qs. Or I'm sorry, the 195s. And you can see that pulled back to that 185. It was actually trading pretty good early in the day. And then it kind of just got sucked up there. Let's look at today's full day here. There's your start to the day. It started out, and then we got that nice green bar there, right at about 10:30, 10:15. And guess what? It just equated to more selling. It looked like we were going to catch some support there. Didn't happen. What does this remind you of? December 24th, right? Not a whole lot of news driving the thing down, just old rumors and old stories. And every time it seemed like it caught itself, it'd go down another one. Caught itself, go down another level. And then it finally caught at the end. And that's a nice split bar there, and you're starting to get some momentum, the RSI and all that nonsense. So look, but we think the enthusiasm and we think the vigor of the market will change going into tomorrow. We'll see if that plays out true. We will put a little protection in the portfolios, and that'll probably be the VIX. But otherwise, the way we build our portfolios, we have certain plays in there that cover us when these market pullbacks. Micron, a stock we've talked about. We just started buying some shares yesterday of Micron in our group. And you can see we're getting a nice spike after hours, $1.92 over after hours. We've been in this little short-term trade on Beyond too, and Beyond had a nice $12 day today. Whoop-de-whoop. Our normal plays, our regular plays that we've been talking about, XLV, these leaps are now profitable that we've been talking to you guys about for about the last month and a half, 2 months. We went out to 2021, January 2021, and we went out to a $125 strike. Those are already profitable, and now we've got some good decisions to make on it, whether we'll carry this trade or not. Our X leaps, we've been talking about the steel trade. Guess what? X leaps went profitable. We had a nice push up over 15 today. It was a really nice day for the stock. This is the typical action for X nowadays. It pops up real nice and then it kind of trickles down during the day. Yesterday was kind of an exception to the rule, but you can see it's mostly the same action. But that's probably market driven, right? X is a pretty popular stock. What is our other trades we've been talking about? OIH, our oil trade. Now this expires middle of next month, so we're gonna have to make a decision here pretty soon. We'll let you guys know what we decided. All you guys following along on the show, but we still like oil going forward. Whether we roll out of these at a little bit of a loss or something and roll into something more appropriate on the options, we'll let you guys know. But we're analyzing this trade going forward. Now, we talked to you guys a few months about some potential trades for you guys, right? We talked yesterday. We opened up some Micron shares. If you guys jumped on that, good job. Other than that, what we're still trading is we still like MBRX for the long term. We like this one, a little biotech. We were talking about this before we went on hiatus, their vacation for a couple weeks, right? Look at that base there. Now, we had that one pop on that little news and all. Hey, day traders kind of sucked it up. But we're still basically building that base. This has a nice pancreatic drug, cancer drug, and some other stuff going on for it. We think this thing's got big future potential. So we built the position in that. We built it under $1.50. We did that. You're looking for another idea, maybe a home builder. We like BZH. This stock's been through a lot in the last year. But really, if you take a good look at it, it started out the year strong. It had everything going for it. And then all of a sudden that home builder stuff came in, right? Well, if you look at it, it just pulled it right back down to that support. It looks like we're getting a second bounce off this. This might be a good entry point. For all you traders looking for something in the home builders. We talked about yesterday, we opened up a position in WWE. We've got some $85 calls going on this, and we gave ourselves about 4 weeks on those. We're expecting a big move from WWE here pretty quick. Expecting and getting are sometimes two different things, right, gang? You got to be a little patient with your trades, all right? We always talk about that. Be patient with your trades. Follow your charts. Charts never lie. The CNBC will lie to you, but your charts won't. Other than that, gang, like I said, we've got a little QQQ play going on here. We like that to be capitulation there on that bar, potentially moving up to the all-time high and stuff. It's been a long 6 weeks, right, guys? Ever since that sell in May go away effect started, that first week in May. But we think we're going to start to get some real semblance to the market now, and let's go see if we can get some gains. All this is we pushed up to that all-time high, and guess what? We're just consolidating a little bit. That was a big run. Look at that big run, right? Boom, 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 boom. That's a nice little run from 171, 169, below 170 up to that's a 20-point run. So it makes sense to consolidate. We had a little bit of a flush day today with not a lot of enthusiasm, not a lot of volume. Guess what? That's what happens. Never short a dull market. We talked about that in December, remember? And remember how that turned out. We came out of December, we hit 500, 600, 200% winners in a row. I think the longest we were in a trade was 5 days. So, when the market gives you slow building, you take slow building, like we did, you guys that follow the show, we opened up those leaps a couple months ago, and and we anticipated the volatility, and now those leaps, actually two of those three leaps are profitable and the other one's right behind. You see how you adjust your strategy to the market. No one strategy works for every market. Okay, gang? So look, let's call this a daily update. We'll be back tomorrow. All you regular viewers, thank you for viewing. Be sure to subscribe. Be sure to share the program if you get something out of it and enjoy it. All right, gang, we'll talk soon.